Hey traders, welcome back to another Forex Weekly Forecast. My name is Alexander Nikitin. I'm a full-time professional trader and a programmer as well. And this is a video that I put out each and every weekend, taking you through an opportunity that's on my radar in the currency markets, as well as touching on a subject of trading education and psychology. If you are one of my subscribers here on YouTube, I just want to say a special thank you once again. You guys have been doing a great job helping me grow the channel. Continue to hit that like button, continue to share this video on social media. And if you are new and this is the first time you are checking out my channel, I hope you will enjoy what you see. I'm not gonna give you a super secret strategy that will turn you into a professional trader overnight, but rather show you a reality of trading. Sometimes it's really good and sometimes it's really frustrating. As you might have noticed by surfing through the videos on my channel, I'm using the same method over and over again. Although it may look a bit boring, but I have at least two reasons for doing that. One of them is to show you that trading is a probability game, and for statistics to play out, you need to exploit your edge for a long period of time without switching to other methods. And the second reason is to show you that trading is rather a psychology and money management game than analysis. Indeed, guys, you don't need to take every turn of the market to generate huge amount of money. And let me draw some pictures to illustrate my thoughts. Let us suppose we have two traders. One of them took hundreds of trades in a month. He had winners, he had losers, he had winners, he had losers, then he had winners, he had losers, he had winners, and he ended his month here. If you will compare the starting point and the ending point, the total amount of money generated will look this way. Let me make this rectangle green so you can see what I mean. And just imagine another trader who had less trades, just a few, maybe only one, and it looks this way. So if you compare the two results of the first trader and the second trader, you will see the same amount generated. But the first one, because he had lots of trades, he spent more money. He paid commissions, he paid spreads, and in case he was leaving his position overnight, he was paying swap as well. So as compared to the second trader, the first one generated less. Let me put another example to show you something else. For example, the first trader generated 100 pips. Let me draw it. 100 pips. And the second trader generated only 1 pip. So I have a question. Which one of them generated more money? The first one or the second? What should be your answer? Your answer should be, it all depends on money management. If the first trader's pip cost was only $1 per pip, then in the end of the month he generated $100. But if the second trader pip cost was $10,000 per pip, then this one pip means that he generated $10,000 per month. So it's not analysis, it is money management and psychology as well. So today I'm gonna talk about a high time frame analysis. This is the first and the most important part for my analysis process, because it answers the questions: what price is doing now and what price is most likely to do next. Let me use Australian dollar as example. we have a chart. This is a daily chart. My high time frame is daily, my trading time frame is 4-hour or hourly. I'm looking at my high time frame, and the first thing I need to find is a turning point. And this turning point should be a fractal point. What I mean by fractal point, for example, if we have a high, this means that on the to the left of this high, we should have at least 4 highs that are lower. Look at this high, it is lower than the first one. Look at this, it is lower than the first. Look at this, it is lower than the first, and this one is lower as well. And on the right, we should have at least 4 highs that are lower. If this criteria is met, this is called a 9-candle fractal, because we have the fractal high, 4 highs that are lower on the left, and 4 highs that are lower on the right. I take a rectangle tool and draw a rectangle between the highest high and the highest close of this formation. I draw it red because it is a potential selling zone. And I do the reverse with my lows. If I have a low, I need to have at least 4 lows that are higher on the left side, and I need to have 4 lows that are higher on the right side. If these criteria are met, I take my rectangle tool and draw the rectangle from the lowest close to the lowest low of this formation, the same way I did it for the highest. These rectangles are marking support and resistance zones. And if you look left, they are usually very significant support resistance zones that acted pretty good in the past. Let me show it with horizontal lines. Look at this horizontal line. Let us go into the past and see how it acted as resistance, support, resistance. And let me place the horizontal line in the bottom. See how it acted as support, support, resistance, a little bit of support, and support as well. Once I have my zones, then I make predictions. I first need to say what price is doing now. The price is moving to the high zone. If it is moving to the high zone, my prediction is as follows. If price goes and enters this zone, it will most likely bounce off this. So my prediction is to wait until it goes higher, enters into the zone, and then to sell it. But if price goes lower and touches the green rectangle, the prediction will be that it will most likely bounce off this. So this is the higher time frame analysis. Once you know what direction you want to play, the rest is very easy. You just switch to a trading time frame and you just decide how will you get involved. You will either use a pattern, you will either use some other methods for getting involved, and that's it. Well guys, hope you enjoyed this video, hope you like this. If so, please give me your thumbs up, share this video on social media, and until then, good luck, good trading, hope to see you soon.